Everybody, Real Estate Ninja here. I hope you're doing well. Foreclosure activity is picking up. We're going to talk about that today. And I want people to understand as this gets bigger, and just so you know, a lot of these news stories are going to say it's nowhere near recent highs like back in 2019, 2018. That is to be expected because of Dodd-Frank reforms and state governments coming out and trying to get involved and saying, banks can't foreclose on anybody. The Fed said banks can't foreclose on anybody, but that has now changed. And so as of this last spring, banks have been able to go from forbearance to foreclosure. It's going to take a little bit longer. By June, we're going to see all of these foreclosures wave hitting the market, but understand that it is picking up, and that's what we're going to go over today. Also, Real Estate Crash Course is being closed to any new students as of January 1st. Links down below if you want to check it out. It says here, this is out of DS News. Report, foreclosure activity trends are increasing. It says the National REO Brokers Association, or the NRBA, says its members are reporting increased commercial real estate foreclosure and resale activity as 2023 comes to an end. While much of the national focus is on distressed assets in the office space sector that's imploding, that's called CMBS or commercial mortgage-backed securities, more of the smaller standalone structures that house small businesses are being repossessed and resold as well. Now, let me stop there and say, in commercial mortgage-backed securities, those imploded first because the government didn't put a stop to any of those foreclosures. So we are seeing those swing wildly so bad, and they have been getting foreclosed on for the past couple of years. They are so bad. This is actually the reason why the banks started to implode and fail in the springtime and why the FDIC said that they were insolvent. Okay, so that's a big deal. But next is the wave of mortgage-backed security failures and foreclosures in residential real estate. That's happening in the second to third quarter of 2024. And if you're not ready for it, I don't know what to tell you. So let me know down below if you're in the middle of going through these hard times, because people need to understand this. They need to get ready for this. And if you're going through hard times, there's actually things that you can do to prevent getting foreclosed on. There are also, this is what blows me away, the way that you can work on your credit. The sooner the better, you can actually take advantage of this next real estate crash. I saw people that got foreclosed on back in the Great Recession only to be back in a home in less than 15 months. So there are things that you can do even if you're being foreclosed on right now to get ready for this real estate crash, because the appointed time for this crash will be after the Fed starts drastically dropping rates. But it sounds crazy. Most people won't even be ready or mentally prepared to buy a house, and that means the prices will keep dropping for a period of years, okay? So it says here, a growing number of NRBA brokers are reporting significant upticks in the number of small commercial real estate properties coming back on the market. A recent report from Epic seems to support this, indicating that there were 631 commercial bankruptcies filed in October of 2023, which is an increase of 106% year over year. Excuse me. So right there, you are seeing an increase of these small commercial real estate properties increasing by a factor of, well, it's a factor of 2. It's going up 106% year over year. That's a big move. Now, the Mortgage Bankers Association's quarterly survey of commercial multifamily mortgage bankers originations, also shows a decrease in commercial real estate mortgage borrowing of 44% year over year. The NRBA is a national trade association dedicated to supporting the assistance of national elite real estate brokerages and financial institutions. Now, this is an interesting quote, and I'll explain in a second. Not everyone can resell a small commercial property quickly. Kevin Curran observed, training and expertise are required to ensure the post-foreclosure resale is compliant and effective, especially in situations involving small business administration loans, defaults, and the like. It's in every community's interest to get new owners into abandoned structures like gas stations and standalone restaurants quickly to avoid the potential of blighted properties and all of the consequences that follow. Let me explain this. First off, that is a big ass, sales pitch by a real estate agent. Now, I should know because I was a real estate agent, but I was the worst real estate agent ever. I used to own a real estate brokerage, and I only became an agent because I've been a real estate investor since 2001. Sold all my properties in 2006 to get ready for that crash. But I was a bad real estate agent because I couldn't do this kind of stuff. The fact of the matter is, the reason why Corinne is saying this from the NRBA is because he's saying, hey, the last thing we need is a bunch of abandoned buildings downtown, because then the public starts to figure out, oh crap, this is bad. And potential would-be purchasers of those properties are going, maybe this isn't the time to start a business. If that restaurant failed and then the next one failed, the next one failed, maybe there's something here. Let me ask you this. How many times have you been in town and there's always this one part of town where no businesses can stick around, whether it's a lack of foot traffic or drive-bys, but there is always a sucker born every day when the last one goes out of business and then someone pops in new. You're like, what? There was like 5 restaurants in there before. Obviously, nobody wants to eat there in that neighborhood. It just blows me away, right? But that's essentially what he's saying. But this is the other thing that you need to understand from real estate speak. It says here, not everyone can resell a small property quickly. Well, you can't, because the economy is collapsing. And people need to understand that it's not getting any better anytime fast. Everybody's begging the Federal Reserve to lower rates, but you have to understand there's only one reason that the Federal Reserve will ever lower interest rates, because they actually don't like low interest rates, just so you know. But there's only one reason they're going to lower interest rates, because everything's crashing down. If you go through all of history and you look at when the Fed started lowering rates, everything was collapsing. Consumer sentiment, the stock market, the real estate market. You have to see that as the case. And just so you know, if everybody thinks, oh, this is great, I'm going to hold out until, there is a way to do it, but most people don't understand it. And most people get caught in this cycle, mind cycle, of, okay, it's going to be like this forever. I'm done. I'm going to miss that credit card payment. They're too leveraged. And by then, everything's crashing. So there are easy ways of getting out of this. Now, let me tell you the last little key, and they say the silver lining. The silver lining of this trend, and this is the same guy talking from the NRBA, the silver lining of this trend is that it's usually local or regional investors seeking to purchase commercial REO properties. REO stands for real estate owned. So, that's one of the cycles of the foreclosure process. And by that point, the bank that borrowed the money, loaned the money out for that property, now owns it and is selling it with an agent. Okay, so that's what that stands for. Sorry. I became an REO specialist years ago, and I really dug deep into it. Okay, so it says usually it's local or regional investors seeking to purchase commercial REO properties, often to launch new concepts or business more resilient to the impact of things like online retail or DoorDash dining, he said. They keep the community moving forward by getting these properties back into the market and retail sectors. So let me close with saying this. I can almost guarantee you, if you look up this guy, Corinne, from the NRBA, he hasn't even been a real estate agent anytime prior to 2010. Why can I say that? Or maybe let's say 2008. Why can I say that? Because if he was, and I speak with very intelligent real estate agents, investors, and mortgage brokers that have been in the market way before, let's say starting back in 2001 when I started, and they all know the exact same thing. This is not only happening again, like the Great Recession, but it's a lot worse. With that being said, thank you so much for watching. If you're interested in the real estate crash course, how you can prepare, it's open for another month. The link is down below, and I bundled it with a couple bonus courses. With that being said, the Real Estate Ninja is out.